All right, howdy, 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 howdy. Good morning. It's a Wednesday. So we got kitty cat oil inventories, maybe a few other things. Thank you for being here. Let's go. All right, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So, guten Morgen. My name is Wayne McDonald. I'm a currency trader just like you. Thank you for being part of the Forex.Today YouTube community of, 16,500 currency traders all around the world. I think that's really cool. We get together this time of day to align our satellites, coordinate our watches. We want to talk technical analysis, fundamental analysis, risk management, trade entry. It might be spot trading, scalping, position trading, swing trading, carry trading, all these different things. But you're the boss, so you got to ask the questions, right? Now I suggest you take notes. Many people here do take notes, and then what they do is they go to the comment section under the recording of the video. So like 20 minutes after the webinar is done, and they document their notes in the comment section so that they can go back and search. A lot of people do the time stamping as well. So take notes, ask questions, get involved. That's the key. I don't preach get rich quick. I preach long-term vision, a ridiculous, sickening work ethic, consistency, repeatability, those types of things, and then of course treating your trading like a business. So if those things appeal to you, you're in the right place, my friend. Pop a squat. Let's get on with it. By the way, I'd like to thank Traders Way for being the sponsor of our community. They're a broker, you're a trader, you need a broker, they need a trader. Why don't you give them an opportunity to earn your loyalty and respect and your business? So you give them a shot. Go to tradersway.com, open up a demo account, download MT4 or download MT5. You could have a fixed spread account. You could have a variable spread account. You can have an ECN account. Awesome. So the link to Traders Way is in the description below. Please go there and click that just to show your support. The second thing is, if you like my chart templates, the link is in the description below. If you want to read my book, the link is in the description below. If learning by videos is your modality, then go to fxbootcamp.com. There's over 35 hours of videos, and right now they're 80% off, or close to it, 76% off. The link to that is in the description below. If you want to be a part of my live groups, well, you have to do the video stuff first. So then go to fxbootcamp.com, join that, and then you'll be the live group will be made available to you. So there's so much, but my point is the link is in the description below. So many resources available to you. Why reinvent the wheel? Cool. So what did we talk about yesterday? I showed you how to scalp off of a 4-hour chart. Huh. We made our pips, whatever it was, 25 pips or something. Huh. Whatever. But I hope you see the process of the top-down methodology of trading. And I hope you found that interesting. Yesterday we also covered Adam Smith's discussion in 1776 of carry trading, specifically foreign exchange carry trading. Pretty amazing. History repeats itself, huh? All right, coolio. So looking at where we're standing now, seems like the dollar's weak. Very nice. Yen is strong. That's not nice, but dollar's weak, so that's cool. Pound is trying to kind of pull itself together. Kiwi is stuck in the middle. It's not strong. It's not weak. CAD not doing well, so we'll have to take a look at CAD today and oil today because today is Wednesday, and that's a great day to be trading oil. What else? Euro, a little bit off, and Aussie, stuck in the middle. So really, I would look at this and say, nothing's really going on. So like the strong yen offsets the weak dollar. So that's a killjoy there. And then, moderate on the APAC pairs. And then the European pairs are weakish. One is weakish to strengthening. The other one is strengthening to weakening. So pound and euro offset each other. And so that's it. So a pretty neutral market. It was one way to look at it. But of course, you might look at it from a different point of view or a different time. Theory of relativity. Okay, so my oh my, WTI, very nice, very nice. Okay, so there's 1,500 2 days ago. There's 1,500 yesterday. You starting to see the theme? I've made you experts at trading oil. Market opens, sell high. Market opens, buy low. It's so confusing. I don't know what to do. Oh, that coffee is so good. Okay, so like anytime you make a higher high, you drag it across. Okay? But notice we're climbing above 40 now. 40 was our top, then 40 was our bottom. So let's kind of just do it this way. Okay? See, before 40 was holding us down, now 40 is holding us up. So is this going to 50 or what, bro? Good deal, bro. Huh? What do you think? I mean, not today, but like when do you get on the clue train? When do you recognize that that's happened, or it might happen, or it might continue to happen, so on and so forth. The interesting thing is we've really just been talking about this quite some time, right? Or if you think about like over the summer. Right? Do you remember way back in here somewhere? I guess it's more like this period. You guys remember in this period, I believe that's it. Am I looking at this right? November 5th? No, I'm not even. Oh, I'm only on a 4-hour. Yeah, that's what I want to look at. There we go. What I want to look at is this area since about summer. Okay, so here's the June Fed meeting. Okay. That's it. If you're a bull, you buy low at support, and particularly with oil and other commodities, psychological levels are important. But what I want you to decide now is that will it rise higher to go to 50, or will it roll over at 45 and head back down? Can you see that's the money-making decision? Not what's happening on the 5-minute chart? But here's the thing. If you put together a trade plan around that thought, and let's just say you think it's going to go to between, once it gets closer to 45, it's going to head back down to 35. So now, on a smaller time frame, if you start to see bearish setups, you can take the shot. Yes, Stephen. And the thing, Stephen, is the correlation is a macro issue. So it doesn't have to be directly correlated, because if there's some issue like today, oil inventories comes out, right? So if the numbers come out different than expected, it'll move the market. It'll move the stock market. I mean, the oil market, but it might not move the stock market. Or Elon Musk falls down the stairs today, and they're like, "Oh my God, Tesla's in S&P 500," and people, fret, and the stock market comes down. But that doesn't have anything to do with supply or demand of oil, right? However, generally speaking, they're both going to move on macroeconomic demand. So the fundamentals pushing oil up, if it's truly a supply and demand issue, then the same forces will be acting on the stock market. But remember, Stephen, like right now, and maybe for the last 20 years, the stock market goes up because the Fed made it. So we could have bad supply and demand equations out of oil. For example, like last year, we had an oil war between OPEC, the United States, and Russia. Okay? And right now, we're fretting about Libya. Really? You don't have to fret about Libya. But anyways, so that has nothing to do with macroeconomics, right? That has to do specifically with oil. So I want you to look at correlation, try to understand why there's a correlation, not that they're the same. Or they're almost the same. Well, they're not almost the same, but they have relationships with macroeconomics. So if things are good, investors and traders will be demanding commodities, but they'll also be demanding stocks. Okay? So just be careful. Make sure you understand. So you might say you looked at Australia, you looked at China, and you looked at the United States as far as not just the health of their economies, but in this case, Australia is also an importer and exporter, in this case exporter, right? They're an exporter. And so is China. And if the relationship between China and Australia is improving, because China needs iron ore and coal, maybe China also needs energy in the form of crude oil, right? And maybe, and even if they don't buy American oil, it would be a demand for oil in general, and you have to push all that across. So if the United States is doing well and China's doing well, both those, the two largest economies in the world, they're going to demand things including oil. Okay? But like we were talking about, I think last week, when aggregate demand goes up, it goes up for everything. So it would go up for gold, it would go up for oil, it would go up for the stock market, it would go up for Cabernet Sauvignon, right? It would go up for Bart Simpson t-shirts. The consumption for everything would go up. So anyways, let's get into this one more time, make sure you're understanding. You need to decide now whether oil is going to go up $2 and then drop or not. Okay? That's it. You have to make that decision. What you're deciding is, are you truly a bull or a bear? There's our Bitcoin support from like a week ago, and it's still rising. Still riding to 21. One of the lessons that we discussed yesterday was the importance of the 55 and what it means. Okay, this looks like a kickoff at 21. This looks like a kickoff at 21. And yeah, so follow up on yesterday's conversation. It wasn't on this, it was on Aussie dollar. But nonetheless, there should be some meaning to what you see here. Another way of looking at it is the frequency is increasing. The velocity is increasing. So let's do WTI one more time, even though we just talked about it. How about this? If you think we're going to maintain momentum up to 44 and through 44, maybe on our way to 48 over the next week or two, then the Canadian dollar will strengthen and most likely the US dollar will weaken. That's why you look at commodities. Because remind yourself, you might say, well, Wayne, I'm just a Forex trader. I'm only a Forex trader. I don't trade oil. Yeah, you do. I don't trade gold. Yeah, you do. I don't trade Bart Simpson t-shirts and folding beach lawn chairs and coolers that look a lot like Yeti coolers. Yeah, you do. Because when you're trading foreign exchange, you're trading money flowing over a border. So if the money is flowing over the border for your fake Yeti cooler, right? Your fake Yeti cooler, that's what you're trading. I mean, the money left the United States. Let's say if you're American, it left the United States so you can buy some junk. Remember, I didn't say an asset. I said junk. So the money left the border. So if you're buying, let's say, euro dollar, it's the same thing as you buying. I mean, I don't think fake Yeti coolers come from France, but my Le Creuset does. So, right? So I'm trading Le Creuset when I'm buying euro dollar or BMW or Ferrari. Okay? There's always a reason, is my point. So discovering oil going up, right, or analyzing that you believe based on the technicals and fundamentals that you see in your analysis, you say, oh, I think there's going to be a sustained move in WTI over the next month or two. And if so, now you know how to trade currencies. It's so funny, Steve. Steve's like, in the UK, we use, really everyone in the United Kingdom uses your 2050? That's funny. It's like, well, that's what the Queen told us, right? That's funny. So here's what I used to do. So I'm self-taught, Stevie, okay? So I used to use, here's what I did. I used every single moving average on the planet. I used them all. This was 20 years ago when I didn't even know what a moving average was. So I used simple moving averages, exponential moving averages, and a bunch. But let's just pretend I did something like this. Let's say I just did something like this. Okay? And I looked at them. And I looked at them. Of course, I didn't do it like this, but I tested every single one of these. Okay? And what I discovered in my personal analysis, remember, my first Forex account didn't even come with charts. Forex traders, when I started trading, didn't use charts. I paid something like $200 a month just for charts. You guys have it so easy. Okay? Anyway, so I looked at them and I'm like, well, what does it mean? Which ones work? Which ones don't work? Why do they work? Why do they don't work? And I would say, well, in the beginning, this line here looked interesting to me. Would you agree with that? That here it was resistance and then here it was support? So I said to myself, I'll make that the trend line. That will be the trend. That will tell me if we're trending up or trending down. Okay, so I'll isolate that one. I don't need all these other purpley ones, let's say. And then you say, well, I need to know if when the market is bullish, so that's the other way of looking at this. When I say trend, I mean market, okay? So like the market is trending up. Maybe not price, but the market, this overall, is currently up. Okay, so I isolate that. And I use the 200 EMA, okay? And then I look at these things and I'm like, well, when it became bullish, it was most bullish here, but then when it dropped lower, it became less bullish. So I started looking at which moving average, which one, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, let's say. So I looked at the combination of 10 moving averages. I'm like, which ones tell me that not only is the market in a bullish trend, when is sort of the market red hot? I mean, that's why it's red hot here, right? Why, like, when do I know it's red hot and when do I know it's no longer red hot? And so I looked at things and looked at things and looked at these things. And I'm like, well, I kind of like the 8's too slow, the 5's too fast, but I kind of like the combination of the 5 crossing and back above the 8. So I'll use that. And then I wanted to say, okay, well, that's price. What about the bullishness or lack of bullishness in the market? Now, this is the long-term trend, but what about market conditions? Like, is it bullish now? Is it less bullish there? So I started looking at things like 20 all the way up to 100. And then I isolated, well, 20, 60 seemed to work really well. And by the way, remember, Steve, I didn't know anyone else trading. People didn't have charts. YouTube hadn't been invented yet. So no one came along and said, son, why don't you use 2060? Everybody in the UK is doing it. Okay? I'm like, so I randomly discovered these. Okay? So I used them for about a year. Okay? I used them for about a year. And by the way, on TV, they usually use like 20 and 100 and stuff like that. So anyways, so I'm using 2060, 2060, and they're fine. They're fine. I mean, that's not the secret formula, right? I know that, but they were adequate. If you know how to do your analysis, they were adequate. And I realized I could use 18 and 58. I could use 22 and 68, and it wouldn't matter. 24, right? And so I refined this a little bit to 2060, and it was adequate. Then one day I was reading about Fibonacci, and I couldn't believe how much crap it was. But I was reading about it. And there's two things with Fibonacci. There's the sequence and there's the ratio. And they're like, look at the texture on the back of a sea star. Fibonacci. Look at how the cherry blossom blooms. Fibonacci. Look at how geese fly in a V formation. Fibonacci. So look at your foreign exchange trade. Fibonacci. And I'm like, oh my God, gullible, nincompoop. Anyways. But I looked at the golden ratio, and this goes all the way back to even, wasn't Fibonacci the other guy, the other math guy? So there's math, right? So someone was doing things like, there's a note, and then you cut the string in half, and it goes up an octave, right? And there's math between, was it Euclideus? Anyways, it was the guy that, before Fibonacci, I think. So Fibonacci just ripped off Euclideus, I think it was. But like this idea, like there's ratios. If you cut it with half the string, you get double the pitch, and then there's another one. So anyway, so they're borrowing off of each other, and there is math. I understand like the math. So like 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, 233, so on and so forth, right? And I'm like, oh, Well, 21, so let's change this now to a different color. 21 and 55 are in the sequence now, and there's a ratio between them, right? The golden ratio. And I'm like, well, I'm using 2060, and they seem to work pretty decently. Okay? So then I'm like, well, I wonder if it's because I'm basically using Fibonacci numbers. So I remember the day, in fact, I thought of this in a meditation, actually. So I came out of meditation. I'm like, oh my God, I think I figured it out. I understand. Maybe they'll work a lot better because they're not quite, but maybe it's Fibonacci. And I changed it, and it didn't really make a difference. Didn't really matter if I used 2060 or 2155, but I'm like, well, it's kind of cool that they're fib numbers, and that's it. That's it. So I settled on 58, 2155, and 200, okay? Because of scientific methodology, not because the Queen told me to. Okay, Stephen? Stevie? Steve Moo. Okay. So again, maybe it's wrong, but I'm self-taught. That was the best I could do under the circumstances. Yeah. My pleasure, Steve. Hey, can I get a like for that? Was that good? Come on, tell me. I think it's funny, though. We in the UK, right? That's just so funny. It's just like, I'm just thinking of so many jokes. Like, you got to bring up the Queen in that situation. But there's Margaret Thatcher jokes running through my mind. I mean, there's just so many, right? All right. So gold sort of just doing its thing. Okay. Remember, we're in the hour of power now. That's how we were taught. But who's teaching you? Yeah, Churchill. Oh, I found the picture just the other day. It's on the cloud, though. But I found the picture of me sitting in Winston Churchill's leather chair in the in the museum, right? Right? In the museum. They have a chair, and they're like, this is the chair in which... Right? And Winston Churchill himself would smoke cigars. So I'm doing this, right? I'm looking around. There's nobody in the museum. I'm like, you know it would be an epic selfie? So I pull out a Churchill cigar, and I go, clip, and I take out a lighter, and I get it going, and I sit in Winston Churchill's chair, and I'm like, look at me, selfie. Oh my God, that is the way to roll, man. So yeah, I got a picture of myself sitting in the chair Winston Churchill used to smoke cigars, and I'm smoking a Churchill cigar. It's just funny. I'm like, boom, did that. All right, so there's my narcissism for the day. People are going to hate me because I talked about myself. All right. Let's move on to... Let's look at exotics again. I like exotics. I like them real nice. They're real nice. Okay? Real nice. So, kicking off here, right? Yeah, I'll go over gold for sure. Okay. So this lends back to maybe yesterday's conversation of, is it doing what you wanted? I don't know. So last week is when I created this trade plan for you. Okay. And here it is. So it's worked out. Is it doing what you wanted to down here? Right? How much of what you're doing right now is hope? And how much of it is analysis? So if you trade it up in here, you got plenty of pips, but was this your plan? So if I were me, I'd be thinking about my risk management here. Should I just take the money and leave and see if it breaks through? Or do I risk it all? I got no much to lose. I'm about to risk it all. Well, Gary, it'd be a weak dollar. Yeah. Weak dollar is a big part of it. Also, I would look at the value of the Chinese currency and what their trading competitors have to do to compete. So like, I don't have RMB here, but imagine, what is it? CHN. Imagine it was weakening. Well, that's really bad for Japan, Korea, India, for example. Okay, Taiwan. So their central banks might have to compete with something like that. And one way of doing it would be buying gold. Okay. The other thing, Gary, and we talked about this maybe in our live group, I don't know, last week or week before, but just what I said earlier today about if global consumption is going up. And so that's why we look at central bank websites and we look at all these other websites. We're looking for signs of improved global demand. And the question might be, well, demand for what? And I'm like, everything. So you might say, is global GDP? I mean, it might be down because of COVID, but is it no longer falling? And that might lend towards gold. But generally, yeah, I would say the two things, the dollar weakening, well, actually probably three things, right? The dollar weakening, increase in consumption, and trade wars in Asia would prop up gold. Now, other people are like, no, the Fed's printing money, inflation's going to go through the roof. No, that would not be something I would talk about. Jeffrey, do you want the honest answer? Jeffrey says, what advice would you give someone who's been trading for a couple of years but still isn't profitable? You're asking me, so I'll tell you my opinion, and I truly believe it. It's not a sales pitch. You need to join FX Bootcamp. That's it. I don't know what you know, and everything you know over the last 2 years could just be total garbage. I don't know. There's a lot of bad advice out there. I'm self-taught, so I never got any bad advice. But we have to analyze your strengths and weaknesses. And I don't know if it's technical or fundamental. So you'd likely start with technical analysis, but then there's the strategy side. Once you know how to trade a 5A cross or something, right? Like, okay, fine. Now we have to like multiple time frames and the time of day and the type of trading. And do you know how to scalp? Do you know how to spot? Do you know how to position? Do you know how to swing trade? Do you know carry trading? You're folding all of that together, and that comes down to multiple time frames and the strategies around the time frames. How are you in regards to fundamental analysis? Are you solid on your Are you solid on your macro? Like, for example, do you know how in I think the 4th hour of the fundamentals course, you're managing the balance sheet at a commercial bank and you're making decisions, right? On how to manage that balance sheet for the commercial bank, right? Because if you don't know how to run a commercial bank, how would you possibly understand how to run a central bank, right? So like there's so many things there, but like, and then your techniques and your timing for day trading and swing trading, like there's so many things. So you could do this for 10 years, you can still suck. You could play golf once a week for 30 years and generally suck. So I don't know. But I know if you have a ridiculous, sickening work ethic, I can fix you. But I mean, and then you're like, well, you're just saying that so I can make money. I don't know. So you could take it for, you asked me, I gave you the opinion. I can fix you. Or you can think of it as a sales pitch. And you're like, I don't get this guy. He's all in it for the money. Then don't do it. Okay? Don't fight it. One or the other. You're in or you're out. Okay? Here says South Africa might be doing some stimulus. Okay, that could be interesting. Oh, South Africa is going to produce the vaccine now? They don't want American vaccines? So the issue, yeah, well, whatever. So let's just let South Africa fix their issue. That's all. Okay. So thank you, Jeffrey. I hope you do see the sincerity in the response. All right. So let's look at Peso. Peso is another good one, but it's been stalled out. Okay. So for example, if we look at this, and this goes back to answering sort of Jeffrey's question, right? Like, oh, I'm pretty good, but I can't get consistent. Well, the trade plan with USD yen for November is to sell in here. Now, we had some high volatility on election night, of course, but what happened? Well, this is the sell zone, okay? And based on selling there, this is the exact target. So, like, Jeffrey, if you don't know that, I just discovered why your results are not as good as you would like. You're missing giant gaps of knowledge. Oh, we can fix that. It's not a big deal. You can learn. But like that is not just technical, but that's a fundamental play. Okay? So it's fundies in the idea of macro. It's not like fundies in the like central banking policy. Like it's not 1 over R plus E, right? So this would be a central bank play. This is a global trade issue. So based on this, and then on top of that, we also know there's a flow trade. Okay? So as far as the flow of money, okay, this and this are perfect. 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 And by flow, I mean remittance. So, for example, Jeffrey, now you're on the hot seat here. Do you know what remittance is? Because we have it on our calendar. It's on Google Calendar. It goes, pa-ching, get ready. Because $2.6 billion is about to move this way. And you should front it. How many people know how to front run a it's actually higher. It's probably closer to 2.8, 2.9. But how many people know approximately 3 billion is about to move right here, right then? You're hot to go, HOTTOGO. How many people know that? That a $3 billion trade is going to move from the United States to Mexico right about that time? Yeah, on it, still making money. So it's like, it's again, right? So like, I'm lifting you up, Jeffrey. Okay. I'm not pushing you down. I'm lifting you up. I'm saying, okay, you've been doing this for a couple of years. You're probably pretty good with technical analysis. You probably explored a few things. You don't know why the market moves. You know how it moves, maybe. I don't know. But you don't know why. And you certainly can't plan for it ahead of time. So that not only did the people know that this was going to happen, they planned it out a couple of weeks in advance. They were front-running a $3 billion trade from the United States to Mexico. So if you knew that in advance, Jeffrey, would that help you in your trading? Would that knowledge positively impact your trading? I think you need to sign up, fxbootcamp.com. We can fix you. People here, dozens and dozens and dozens of people know this. And you're like, well, how the hell don't I know this? Well, maybe you should know it. Okay. Cool. Okay. And in fact, if you don't know my training style, let's do it this way. I'll give it to you for free. How about this? Hang on, youtube.com. Okay. How to trade the Mexican peso and why it works. I'll give this to you, my friend. I published the answer.
But at least
5 or 6 years ago. Oh, I have a jet. It's Mr. I have a jet. I'm the internet's biggest real money options trader, and I have a jet. Yeah, you. With one trade a week, you become independently wealthy. All right. Anyways, sorry for that. So here you go. If that teaches you the answer and you're like, I like the way this guy explains things, now you know for sure. fxbootcamp.com. All right. And yeah, of course it still works today. It's not a trick. That's the beautiful thing. All right. Somebody wanted gold. Did I skip? I had gold over here. I guess I skipped it. I guess I showed it and I'm like, see? But all right. That's not enough info, I guess. Okay, so let's clear this out. Let's start over. What do we know? We always have to ask ourselves, what do we know? Okay. Do you remember someone's like, why is gold falling? Remember that? You're like, well, because it's supposed to. Okay. Isn't it funny? Boom, like exactly off the line. All right, why is gold falling? Because it's supposed to. All right, so now what? You have to ask yourself, is anything fundamentally changed, first of all? And what trade plan you think is in play here? Do you have an ECN broker? No, I don't like ECNs, but I like variable accounts. Okay. I like variable accounts. I like VARs. I've always used a VAR account. I hate commissions, so like I don't want to pay a commission. I want to pay a spread. And again, the only difference is hard dollars versus soft dollars. So in the end, it doesn't actually matter. But if you're like, oh my God, I only have a 0.2% spread, yeah, but you're paying a commission. So what's the difference? Okay. Okay, cool. So if you are trading December now, because remember, November's done. Okay, November, there's the projected low, there's the projected high, and then we've come all the way back down. So you're either going to trade a reset, and the first step of trading a reset is to capture this in the range. So until it breaks, you would imagine it doing something like this. Okay. Your decision now is, will it be here at the end of the year or down here? Your decision is what matters. Okay. So I would like it up here, but what I like is irrelevant. It could still be down here. Who cares? So if I were me, I would treat this like a range. And my assumption in the trade plan, because remember, it's just if-then statement, right? If it holds, then it'll probably do something like this, and then I would take it north. So I just planned out this week and next week. Okay? So I could look to buy here because I know people are not going to sell it at support. Okay? Okay? You see what I mean? I don't think people are going to sell it at support. So if I was already a bull, I'd say, well, somewhere around here is probably going to be a good opportunity to buy. So that, like I taught you yesterday, you move from a 4-hour to a 15 or 5, and you start analyzing at that time frame because my strategy would be done. Yeah, somewhere around this area. Somewhere around here, I might buy it if I get the technical setup on a smaller time frame. And if things go right, then by the end of the week, we'll probably be here. And then by the beginning of next week, we'll probably be here. And then by Wednesday, so 7 days from now, I'll probably be buying a dip just below 1900. And that would be the big breakout rally, and I'll be in it till Christmas. You're welcome. And here's the cool thing about having a trade plan. If it does this, I do nothing. If it does this, I try again. Only if I get the technical setup. Okay? And I would probably sell gold in early next year. Do you recommend placing a position 4-5 lots, buy or sell? Buy? Okay. Do you recommend placing a position 4-5 lots, buy or? I don't know what you're asking me. I don't know. I like the way you trade. Okay. Biddy. Wake up. Okay. So let's move on. I guess look at dollar. All right. So let's take a look. So what do we have right now? We have up. Well, the color's too similar. Okay. Here's the buy. Here's the rebuy. And here's the next buy. Okay, I'm in at 66. We're at 69. Cool. Ed says what's the best fundamental analysis book in my opinion? I've never read one, so I honestly don't know, but we can explore that at the book club. Okay. One of the books we could read, and I think I own it somewhere, is one on economic indicators. Okay. Not fundamentals, but, the difference between PPI and CPI, the difference between CPI and PCE. Do you know all that stuff? So I thought we could just knock that out. Just if anyone is learning how to trade or invest, I think understanding the economic releases that you read in the Wall Street Journal every day. Wow, PCE is 2.8 versus 2.7 expected. You're like, does it matter if you're investing into real estate? Well, of course it matters, son. Oh, you did buy the Bumhole book? Yeah. Yeah, Bernard Bumhole, yeah. So yeah, I like the introduction to that book, but it's probably way outdated now. I don't think they actually do that anymore. But it'd be an interesting read, and then just to have it knocked out so that it's in the that it's in on the site. So if anyone comes in, they're like, "What do I do here? Have you read this book?" No, you need to read the book. It's not a good book. It's like a textbook. It just, you need to know this stuff. So if you don't know it, you have to read it, right? So anyways. Example, euro, what below the, I don't understand. So Giga, are you hedging it? Euro USD with 5 lots and another with 3.5 lots and another 3 to 5 or position below the buy. Sounds like you're scaling in sort of backwards. I'm not sure what you're getting to. If you're buying one and then selling it, you'd be hedging. I don't think that I think what you're saying, so it sounds like because you're saying the number of lots that you're hedging. So like it would matter if you like bought 5 lots here and then it dropped and then you sold here -5. You're trading some sort of spread, and either way you should be able to make money minus the cost of the spread. But I don't think you're talking about hedging. I think what you're saying is, do you buy 3 here and another 3 here and hoping that it goes up? Why? Well, I wouldn't add to a loser. So I'm not sure what you're saying. So I would do this. I would buy here if I was a bull. And then I'd buy here if I was a bull. If I was a bull and I bought here and then it went down, would I buy another one to dollar cost average it? No, absolutely not. So I'll scale into a long-term position like this. This is actually what this is for, this chart that we're looking at now. So why don't I update this and say, all right, so, okay, these are day trades. These are pissy little day trades, but in the direction of my fundamental bias, okay? So let's just say over the last 30 days, okay? I'll just pick a number here. Okay, this all starts with me being a bull. And if you remember, this is a buy zone. Okay, that's the reason I bought this, is it's a buy zone, not on a daily, but on a higher time frame. So the way you would scale is you'd buy one here. Oh, let's do orange or pink. Come on, pinky. There we go. Okay, I'd buy one here, and I did. And then you have the up, 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 down, down, buy another one here. Up, 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 down, down, buy another one here. Up, 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 down, down, buy another one here. Up, 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 down, down, buy another one here. Uh-oh, troublesome trucks. So you could move this stop here. You could move this stop here. This one is already there, okay? And then whew, up, 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 down, down, buy another one here. Up, 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 down, down, buy another one here, okay? And now you got, this is 66. You have this at 68, so you got 200 pips there, 150 pips here. This one's at break even. And then finally it goes up, and I still would just keep it trapped. So what I see is this. So as long as it's up, I treat these as dead almost. and I'm just managing the risk on these ones now. And if it retests and then heads back up, then I could lock in 300 pips here, 250 pips here, 150 pips here, and then probably 100 here, and then, and now I got everything stacked in here. Okay? But in a situation like this, am I adding and adding on the way down? No, that's guaranteed poverty. Okay. Now Pat's like, hey, I was looking for sells here. Oh, that's cool. That's fine. Many people have missed a little piece of data, and I've explained it a couple of times, but I'll say it a third time now. We understand that New Zealand is thinking about going negative interest rates, right? Except somewhere around here, the deputy minister at the central bank said, you know what, things are not as bad as we thought in the summer. See, with COVID and then the economy being shut down, not just with them, but in the economies of all their trading partners, the New Zealand economy was quite dire. And so in July and August, they're like, oh my God, we should probably go negative interest rates. And they were preparing, they say they would, that they're getting ready, that it's imminent, it's going to happen. And all of a sudden we hit October, November, right? The end of October, so around Halloween, the deputy minister, so he accidentally said it, but he's like, you know what, things are not as bad. No negative interest rates. Okay. Interesting. Hang on, let me check my lag here. My internet's lagging for some reason. Oops. Let me see if it's true or if it's just truly YouTube. Okay, it's slow, but it should be enough. I don't know why YouTube's complaining. I know you're going to say the upload speed, but the upload speed's pretty consistent. Yeah, it's a little slow. It's not bad. It should be good enough. I don't know why YouTube's complaining. YouTube says it's me. I think it's them. Okay. If the first at minus doesn't buy a special stop, no, a special stop loss? No, it's always set. So, for example, if you're in the day trading course, like when you buy in the green zone, you know exactly where your stop goes. Well, if you're buying in the green zone, you're a bull, so your stop goes below support. Done. It's not even a thought. So, does it change? No, it doesn't change. Anthony's like the Martindale technique. Well, it's not even a technique. It's a mathematical glitch that people try to take advantage of, but it will lead to your destruction. Okay. And a Martindale, for example, can lead to 95% win rate, except they blow up the account at the end. So imagine you have $1 billion and you're like, it's going up, 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 it's going broke. You're out. Dead. Blew up the whole account. So people don't like that. Investors don't like it. It just doesn't make any sense. People, it's like something to fool a poor person on how to get rich if they only pay you money. Okay. So it just doesn't make sense. It's not what wealthy people want. They don't want that type of result. Okay. All right, let's take a look at the Great British Pound. Here's a very simple support. Here's the post-election volatility. This is where I bought it. We went up here, came down, this roll reversal, and we're back at the top again. Okay, this is a textbook trade. Isn't that neat? So I'm long at 129.50. Oops, I don't need that there. So I'm long at 129.50. We're at 32.80, so let's just call it 150. And I spent 8 minutes working on this. So I'm trying to tell you guys, if you get your trades, if you can get your trading together, if you can pull it together, the way to make big money, and I think this goes back to the conversation yesterday, the way to make big money is not to make big bets. The way to make big money is to make sure you let your winners run. Yeah, I noticed it. I don't know what it is, and now I'm starting to remember. There was something like this happened a couple of years ago, where right about the same time every day there would be a lag, like exactly 1 hour and 13 minutes. It would start lagging, and I don't remember what the fix was. I think it's Streamlabs. So, so there's been an update, it looks like. Somebody's updated something, whether it's Streamlabs, YouTube, Windows. Somebody's updated something, and now it creates a timeout lag, because it's not my internet connection. Yeah, so I don't know. Somebody's done something to mess with us. Thanks for nothing. So anyways, if the Geek Squad's in the audience today and you know a fix for that, let me know. Please email me. How many do I watch? Well, really, pairs are irrelevant to me. A pair, that doesn't make sense to me. Oops. Here's 99%, not 90, well, yeah, 99% of what I do. USD, JPY, and I guess more like, I was going to throw in Swiss franc, not this year, but how about, I'm going to throw like commodities. And exotics. I'll put them in a different category in my mind, because exotics are often, to me, a commodity, right? So, okay, so all of this, right, versus all. So that's it. That's what I do. Actually, that's 100%. So I don't really do crosses, for example. I don't look at pound kiwi that much. Okay, it's not really what I do. You can, of course, but it's not really what I do. I'm a macro. So let's label this. You always have to label it, right? So let's thicken this a little bit. I am a macro trend trader. Okay. So what is it that I trade? Macro trends. So therefore, I'm not going to trade pound Kiwi, pound Aussie, that kind of stuff. But I'll probably trade a pound Swiss franc, I'll probably trade a pound yen, I'll probably trade a pound dollar. But other than that, not really. Okay. Pound Kiwi is a monster on the block. Yeah. Yeah. I mean, I'm not saying I'm not saying to not trade it. What I'm saying is I don't trade it. I'm a global, right? So it's like if we're speaking in front of potential investors, like a pitch night, I'd go up and say, hello, my name is Wayne McDonald. I'm a macro trend trader. And then I can go through my pitch. And then, right, someone else could come up and they do something else. And that would lead them to, kicking butt on a pound Kiwi. Cool. It's just not what I do. Okay. What's the spread on Bitcoin? What do you care? It goes up $1,000 a day. You're worried about a spread? I don't know. No, I don't know. All right, so what else? So we got pound dollar, all that kind of stuff. We can look at euro dollar because we have this well planned out. I got to update this. I got to update that. All right, so I'm long at 17. We're at 1850, so 150 pips. So moving along here, how would I trade this? This is what right? This is straight out of the day trading course. Up, 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 down, down, buy. 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 Okay? And no, it's not working out beautifully at the moment. So if it comes down, you'll have to make decisions. But on the 4 hour, we're riding the 21 every single day. You got an obvious buy. Yeah. Yeah. I know you know, Anthony, right? So I know you know. And I know you know. So therefore, it's common knowledge. So yeah, I'm a little worried, slightly, but it's all good. But once again, you need to know how to day trade. If you don't know how to day trade, forget it. It's over. It ain't going to work. If you don't know how to swing trade, forget it. It's over. It ain't going to work. You can't just trade 5A crosses. You can't just trade 2155 crosses. You can't just trade MACD crosses. You can't just, there's all these. It seems to me that people are pitched by gurus or whatever the word is, shortcuts. Oh, you don't need to know macroeconomics. You just need to trade MACD. And it's wrong, of course. And I think the people that are signing up know it's wrong, but they need it. They need it to work. They're buyers, and someone is selling you whatever, right? But you have to, I think you have to understand. That's it. You have to understand. So euro dollar, everybody here knows I was bullish for all the different reasons. And now all you have to do is day trade it, and it goes up. What's the complication, right? When you're like, well, I don't know how to day trade. Oh, well, I can fix that. Right? Right? That's it. Keep it nice and calm. Nice and calm. Nice and calm. All right. La-di-da-di-da, la-di-da. So we did Peso, Kiwi, ZAR, We've seen all these. I guess we should do Noki. Okay. Okay. We're at support. So you have to make decisions. Okay, you're at support. Okay, check this out. That's the exact sell price, and this is the target. So we've already achieved the goal for the month of November. Notice that I'm only set this up as a bear. Okay? And you may recall back in November, no, it's November. So back in October, I taught you the correlation between Brent and NOK. Norwegian krone, right? Crowner. Krone. Is it kroner or crown? I always mix them up. It doesn't matter. Okay. So I taught you that. And because of that lesson, I said, well, right? Let's move this out here. So based on that, we're bearish. And then I set this up. There's only sells, by the way, right? I don't have any buying tools on here is what I'm saying. All the day trades are set as bears. There's only bearish day trades. Okay? Here, here, and then out. This is out. This is what this means, out. And then here's a new one, but maybe you're not ready. Here's one, and then this would be tomorrow's. But you got to be very careful because we're already at the out zone. Right? Which criteria do you use? What criteria do you use a certain currency every day? Or well, everything is based on macroeconomics and central banking policy. So at some point in May, I think it might have been April. Sometime in April, I became a bear on the US dollar. Was it a moving average crossover? No. Was it a MACD? No. Was it a pivot point? No. Okay. So that's the criteria. Okay, Giga? That's what it was. And I told everybody instantly, I'm like, that's it. That's it. I'm a bear, and I'll probably be a bear for the next 5 years. Maybe longer. Unless something else happens, like another exogenous shock, like the country gets shut down because of COVID. If that happens again, all bets are off because that's not bearish for the US dollar. Okay? Oh, I don't know why you retracted your message. That was exactly right. I don't know how to pronounce your name, 88, but what you said was right. Yeah, okay, Giga. Yeah, my pleasure. So I'll base things on that. Also, there's an element of seasonality, although it occurred a little differently this year because of COVID. Other than that, it's not too different. So, there's some seasonality in there, but it was really something that Jerome Powell said. And I said, that's it. That's it. That's it. That's enough. He said it, I was done. So for those that are trying to learn how to trade Forex and you still have a job, you have a job, you don't need a lot of time to do this well. You can spend as much time as you want, but you don't need a lot. So for example, when it came to fundamental analysis, I only needed one thing from Jerome Powell. Now I'm done. I'm probably done for the next 5 years. The only thing I have to look for is exogenous shocks. And they're almost like black swans, right? So by definition, they're kind of unpredictable. Well, they are unpredictable, and they're outside the norm. So you have to look out for tigers every time you go out into the tall grass. But you haven't seen a tiger for 5 or 6 years. But it'd be wise to keep your eyes open, right? So there's that. So I'm set. I'm set on the fundamentals. So now I use long-term, medium-term, and short-term technical analysis to identify two different things. And on this pair, I can only sell it. So my fundamentals are done. I can only sell it. So at what price would I like to sell it is the first question. And that's based on longer-term technical analysis. At what price would I sell USD NOK? The second part, that relies on the small time frames like 1 hour, 15 minute, 5 minute. At what time do I sell? I already know the price, but at what time? Is it now? Is it tomorrow in Asia? Is it London Open? I don't know when, but I know at what price and I know why. So I have to start with why. And then I have to answer what price would I buy or sell? Because we know if I'm a seller, I sell high. If I'm a buyer, I buy low. It's all predefined. You know it's a universal truth, so we're not debating that. So this just comes down to at what price do I sell this and exactly what time do I pull the trigger? Well, I know the price. I can do some, right? I can do some analysis. So like for tomorrow, I know I want to sell this. No, well, actually, I'm cautious here. But I know 9.0447. Okay? If I get that between now and tomorrow, I could decide to sell it. I know the price. But now I might not sell. I might sell it now. I might wait till New York close. I might wait for tomorrow and catch the Asian fade. So I don't really know the time, but I know the price. It's not complicated. Okay? So the thing is, with some education, you can isolate maybe 1 hour a day to trade. You can do it. You're going to have to focus, and that's what trade planning is all about, by the way. Okay? And very often you don't get a setup, so you don't trade. You only trade when it fits your fundamental bias, and you only trade when you get the price. And now you can isolate a particular hour a day in which you could actually be sort of around ready to go, or use limit orders and stops and whatever. It can be done. You don't have to do this 8 to 10 hours or 8, 10, 12, 14 hours a day. I've certainly done it. I remember years ago I did something like a 4-day stretch with either no sleep or virtually no sleep. It might have been 3 days. But I wore the skin off my tailbone. So do you have to be like that to be successful? No, and that might actually be a detriment on the long run. Okay? So if you only have an hour a day, couple hours a week, the thing is we need to focus when you need to be ready, willing, and able. And we need to focus making sure that you understand why things happen. And then the next thing is just really the time, the price and the time. That's all there is. And if you really don't have a lot of time to wait for the exact time, well, then at least you know the price, and you could use limit orders. And there's EAs that I can give you that can drop down your stops for you in a predefined risk-reward ratio. And this can be, even if you have a day job, the reason I say this is at some point you're going to need a side hustle. And so, because you don't want to spend your money in your trading account. So at some point you will need to be that, and which means your trades need to be worth more. You don't want to bet more money on your trades, so your trades have to be worth more, and you need to let them run. So like I showed you, my pissy little day trades are up 300-400 pips each. And you're like, yeah, but I only worked 8 minutes. Right? 300 pips might be a good day. I'm like, well, I only worked 8 minutes. I don't know if I can call it a day. So what happened? I let it run. There's no genius in that. There's no bravery in that. It's just, it was planned out. So let it run. Just get out of the way. Stop ruining your trading. And that takes maybe some internal strength to say my trades are worth 300 pips. They were not worth 30 pips. They're worth 300 pips. Well, but that you need some proper trading habits and some good trading experience so that you have a basis of strength where you know you're like, okay, this is a good trade. I'm going to let it run 300 pips. Good. Congratulations. Fabulous trade. Cool. So thank you for being part of the Forex.Today YouTube community of 16,000 foreign exchange traders. Please like, please subscribe, please tell your friends. Please leave comments on the recording, my books, my videos, my chart templates, my broker. All those links are in the description below. But please leave a comment and document what you learned today, if anything, or just say hi, say thanks, say something. I'm giving up on you, right? But say something in the comments and just basically tell YouTube this is quality content. I don't think they read your comments, but they just look at the number of comments. So you just say hi, okay? And today is Wednesday. Remember, oil inventories come out later today. Watch your NOK, watch your CAD. And I'm looking forward to seeing you tomorrow. Tomorrow is Thursday, which means it's my live swing trading group. We're meeting tomorrow, and we're going to set up next week's trades. Yeah. So on Thursdays, we meet to set up trades that you're going to be in Monday, Tuesday, and Wednesday. Now, let me say it again. On Thursdays, every Thursday, the live swing trading group meets to discuss trades you'll be in on Monday and Tuesday. Isn't that amazing? It's really cool. I mean, I love it. It's one of my favorite times of the week. Like literally, it's an amazing hour or two of stuff. I mean, it's really cool. So maybe I'll see you over there too. So peace on earth. May the pips be with you. May your profits be above average. Alex, we meet at 2 p.m. now. Okay. What time to short the Aussie? That's so funny. Anyways, peace on earth. Peace on earth. May the pips be with you. May your profits be above average. And I'll see you tomorrow. Take care of yourself.